The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Lots of excitement in the world, and joining us now to discuss the crypto markets, of course, is Seth. He's managing partner and head of liquid investments at CoinFund. Welcome, Seth. Good morning.
Hey, thanks for having me again.
Thank you for coming on. So that's it, right? The bear market's over. It's all done. Let's go rally. Is that it?
Off to the races.
Party on?
No, look, to what you were saying, we think of crypto as risk-on assets. There's an equity-like diversity here. This is technology investing. I think there was a really interesting change in the markets that happened a few weeks ago, 2 weeks ago, with the payrolls number. We saw that as a regime change. When you had the market that thought that the Fed was going to make a policy mistake, tightening into a slowing economy, with Omicron having slowed the economy, everyone was talking about 4Q of 18 as being the parallel. And what we saw with the payrolls number was the economy's actually pretty strong. Things are not slowing as much as expected, which meant there's no reason to think that the Fed is going to move away from being data dependent. And I think today you see PPI coming in a little bit stronger, and the market just shrugged it off. Why? Because the Fed's going to be data dependent at this point. If they see things slowing, they're going to back off of tightening. If they see things continuing to remain strong, they're going to try to fight inflation. So this looks a lot more like 2017 and the early part of 18 in equity markets, where we hit a new high right at the beginning of 4Q, just before everyone started getting worried about a policy mistake. So we feel really good, think we're in a fairly constructive risk-on regime right now, and that the payrolls report was the turning point.
So Seth, just to kind of dig into that a little bit, and looking at just sort of global political events, you're saying Bitcoin is a risk-on asset, or is acting like a risk-on asset. But as Lawrence and I were saying early on, it kind of goes against sort of the philosophy of crypto in a way, because it's supposed to be a safe haven or just a refuge from the turmoil of like the real world. So I guess my question is, do you expect Bitcoin to just continually act this way, or will there be a point where Bitcoin will start to fulfill its promise as being more of a safe haven?
So it's actually interesting. We've been seeing much more dispersion in crypto markets with Bitcoin in kind of a broken down state under the 200-day moving average than what we historically have seen. So there's actually, with that dispersion, with that divergence, you could have Bitcoin and the rest of crypto acting in different ways. So crypto broadly, today, acting risk on, we're seeing dominance come down a little bit. So the rest of crypto is outperforming Bitcoin. But we could certainly see Bitcoin act as a safe haven. My guess is the rest of crypto would not act as a safe haven if we were to have a re-escalation of geopolitical tension. So I think there's not a the real strength of what we're seeing is that we're seeing assets in crypto trade based on their fundamentals rather than trade as this monotonic asset class that has to move in lockstep with Bitcoin. And that's a real sign, I think, of the maturation of the asset class and the diversity of investors that have started to engage in this space. And a lot of those investors are technology investors that are looking at this as the next wave of technology investing.
It's interesting you say technology investors. I wonder if you're hearing anything from sovereign wealth funds. Singapore's state investment fund, Temasek, one of the largest investors in the world, just pulled out of Coinbase, their investment there, just over $2 million. But are you hearing chatter from or talks from sovereign wealth funds or, pension funds? Can you name any names or say what they're interested in, Bitcoin, Ether, or alts?
Yeah, all of the above. Sovereign wealth funds, defined benefit pension plans, and all of the institutional investors in between. I'd say last summer was really the catalyst. I think it was a combination of having seen the move up in the asset class earlier in the year, many of them having missed it. Temasek was very early to the space, so they didn't miss it, but a lot of others were watching it, doing research, saw the move up, and then on the pullback said, you know what, now's the time to start doing a deeper dive. So we saw IDD, ODD, so investment due diligence, operational due diligence, really start to kick up over the fall, and institutional engagement from a funds flow perspective. And this is what we're seeing. I'm sure it's happening broadly in the space since the beginning of the year. So real engagement. I think another component, though, and I believe we talked about this a bit the last time I was on, the regulatory de-risking. So we're still going to have headline risks on the regulatory front, but we think we're going through a normalization on the regulatory front where you have senior senators saying, crypto is here to stay. It's technology innovation. We want to keep it onshore. And that means working with the industry to come up with a thoughtful regulatory regime. And that engenders confidence on the part of institutional investors, on the part of traditional businesses, whether financial businesses, media businesses, that say, you know what, it's actually okay for us to engage with crypto. So we're seeing some really good signs on that front.
Seth, you brought up again the idea of this is a long-term technological investment. Nonetheless, besides Bitcoin and ETH, there are all these other altcoins, and they're all divided based on what they do. So are there any subsectors or sectors that you think are promising right now or well valued at the moment where they at least have some potential upside for investors?
I mean, we think that over time, there's going to be a handful of challenger base layers that end up being quite large in the trillions or tens of trillions. Right now, all of the challenger base layers beyond Bitcoin and ETH are much smaller, less than 50 billion. So that's kind of the de-risked part of the market where you don't have to bet on any individual application layer protocol to be a winner. You're betting on the base layer, the operating system technology, being a place where people want to build and where users want to come. Now, the counter to that would be we're also very bullish on interoperability and cross-chain solutions. So the degree to which any individual ecosystem ends up winning versus a layer on top that spans many is an open question. But right now, I'd say base layers are quite interesting.
All right, Seth.
Speaking of interoperability, there seems to have been there were a couple of controversies recent weeks, with Wormhole and what have you. Do you think that affected people's enthusiasm for that sector, or do you think that's just up in the road?
I think the industry handled it really well. You saw a backstop of the fund. Solana is now above where it was before the exploit. So I think it was a bump in the road. Cross-chain interoperability is very much a part of the future that we expect to see. So I think we're going to see a lot more of that in the coming weeks and months.
Seth, I always like
interoperability, not hacks.
Well, you never know. Every week
we'll
is a
see
surprise.
Some of those too.
But Seth, I'm wondering. I always like to end things off on a price prediction. So, any price predictions for Bitcoin next 3 to 6 months?
Short-term predictions are always hard, but I'm very bullish on Bitcoin for this year. I think we'll likely see an all-time high later this year. Whether that happens in the next 3 to 6 months, I'm not sure.